Hi everyone, this is Paul Lange from DTS, and I want to introduce you to what you're about to watch. This is an hour-long event that was presented live to the free members at Discipline Trading Strategies. This is called Day Trading Questions Answered. I'm going to be discussing purely day trading, as you might guess. I had a lot of questions from a couple of emails that were sent out, and a lot of questions that I thought maybe people should understand better, a lot about the math, a lot about how the math works, the difference between day trading and long-term trading, how risk amounts work, and how that intraday leverage works, even with larger size stocks where you can control quite a bit of stock and make some good money, even with smaller amounts of money, and looking toward the near future where the pattern day trader rule may be ending and people opening smaller accounts would have the opportunity to make some good money day trading. If you enjoyed this, check out the many full videos on educational events, articles, and Trade of the Week videos that you can get access to at the DTS Free Stuff page. For now, sit back and enjoy this event. Good afternoon, everybody. How's the sound? Good evening. Hi, Vera, Neil, and everyone. I don't know who else is going to show up. Probably about what I figured. I made it clear this is about a specific topic tonight. I don't think we're going to go an hour. I think we'll go 30 or 40 minutes, depending somewhat on questions. And it's a very specific topic. I'm very clear about what I'm talking about. Don't want to disappoint anybody. Day Trading Questions Answered, free event for members Tuesday, the 16th. I went over this a few times. I think it's pretty good. I'm kind of freewheeling it, though. This is not a very formal thing to me. I am going to record this. Reminder tomorrow, 3 nights in a row, Monday, Tuesday, Wednesday. But then, of course, that's going to be it for the holidays. Fireside Chat at DTS. I think it's going to be a great presentation. It's going to be not an actual hit list of the favorites of the year, but it is going to be my favorite topics. And I think the most important things about trading, whether you're pretty good at it, learning, or wanting to learn. All right, Tuesday, today, we will review a lot of questions about exactly what day trading is, who can do it, what is needed. Day trading is not scary, whether you want to learn or just follow along. It's likely worth it if you have a couple earnings free a week. What's prompting this is a couple of things. I'm going to close out with a slide that talks about 3 big advantages that have come around recently that I think if you're somebody that's been kind of on the fence about wanting to do it or not. I do these presentations because I get a sense when I talk to people and get emails, what the vibe is, and I send an email out about day trading, I get a lot of questions back and a lot of, I would call, misunderstandings. And I think day trading almost has gotten a certain, I don't know, just there's a certain vibe about it that some people go, oh, gee, I don't want to do that. Sounds like somebody's sitting there all day with an IV bottle in their arm and losing money all the time or something. And that's not at all what it is or has to be. So I won't, and many of you know that who are in the room with me, and even if you've taken a seminar with me, you probably understand that. But let's go and run through a few things. All of tonight is about day trading and how it works, but part of tonight will also be discussing the increased opportunities if and when the PDT rule is abolished, which should be by the end of the year or the beginning of next year. Now, everything I'm talking about applies to day trading, period, except when I start talking about the ability to trade with less than $25,000. To be clear, I think most of you know this. Here, there is right at the top of the free stuff page now, there is a video about the PDT rule, so you can listen to that and get the full detail. But ever since 2002, they required $25,000 in an account to day trade, not for long term, but for day trading. Day trading accounts have huge advantages. You get 4-to-1 leverage, which is something I'm going to go into tonight, and you get instant reuse of your money. You can just buy, sell, buy, sell, buy, sell using your full account over and over and over again, which obviously is great if you're making money. It's pretty terrible if you're losing money. So I want to go over that, but just keep in mind, this is not in place yet. I want to be very clear. It's something that I've done a lot of research, looked into it, talked to people. This is coming, and there's nothing stopping it. It's just a formality to get this done. It is a great thing. I actually read an article saying the disaster coming when they get rid of this. No, the disaster has been making people get a huge account to lose. That's the disaster. People taking out second mortgages to day trade and lose it all. No, you should be able to go in there and play around like you do with futures with a smaller account. So I think this will be a great thing. But I want to go over everything. So link posted in room. There's the link right there for the free stuff page. It's just at the top of it. You'll see one video about the PDT and one that's a new welcome video to anybody learning to trade. So let's back up a minute and just review some things about day trading in general, just day trading, period, all the time, anytime. This is in an email that went out a while ago, and I got a surprising number of comments about this. It kind of just not really understanding stuff. Day trading versus swing or long-term trading. The technical analysis is all the same. It's exactly the same. If you're following along, you don't care. If you're learning it, it's exactly the same. The math is all the same. The time in the trade is just decreased and the share sizing is increased because of the more limited risk with no overnight exposure. When we day trade, we presume that we can get out of anything anytime we want to, so we're not really all that concerned about it. When you hold something overnight, of course, you naturally would set up a risk amount. But in addition to that, you also want to kind of limit the amount of your account in any one stock because you don't want to wake up to a stock that's down 50% and it takes out half your account or something. So that's the second rule you have to follow when you hold overnight. Holding overnight is great. Long term, that's where you make your money. But short term, holding overnight can have a detrimental effect if you blow it. Day trading, you can be in a halt, just so you know. The stocks that I trade, the chance of being in a halt is like being hit by lightning. In my entire career, I was one time, and it came out positive for me. It is only if you trade those crazy stocks, the stock of the day that's news and flying all over. Those are the ones that get halted. So basically, we assume that whatever you get into, you can get out. So we're simply getting higher share size and holding it for a shorter period of time. And this is a little blackboard thing I sent out before. Long term, most of you know this, sorry, bear with me. 100 shares long, it rallies $5, you make $500. And maybe that took a week, 2 weeks, 3 weeks, a month, 2 months, whatever it was. Day trading, 1,000 shares long, it rallies 50 cents, you make $500. That happens in a couple of hours, half a day, maybe all day, just a different path. That's all it is, and there's no tricks, there's no gimmicks, there's no anything else. If there is some other trick or gimmick, please tell me what it is. I'm just here. I just have the simple process of wanting to try to help make people profitable, want to be profitable. Do it through DTS, get educated, do it through DTS by following along, do it on your own, follow somebody else, whatever it is. But if you're available in the morning and you have the right size account right now, I think it's a very great thing to do if you can even sit there a couple mornings a week. It's certainly better than being the greeter at Walmart if you want to make a couple of extra dollars in the week, which is, what some people want to do. It also has the benefit of perhaps opening a door to a more lucrative thing where you're maybe trading more often, where you're maybe taking over your longer term account, where you maybe turn this into a full-time type of gig. Where you want to take this is up to you. But this is all that it is. Instead of working on a weekly chart for a $5 rally, you're maybe working on a 5-minute chart for a 50-cent rally. Most of you are aware of that. So what if the PDT rule is abolished? The next question that people had a lot of questions about is, okay, fine, so I can day trade with $5,000 or $10,000. Wonderful, I've got that, I like to do that, but can you really make any money with $5,000 or $10,000? Well, that's what this slide is all about. And the answer is, yeah, you can. What can you do with 5 or 10K? Well, a lot. To the right is an example you may have seen. Having a 4-to-1, let's say with an 8K account, gives you 32K in buying power. In these days, there are many stocks that have great movement without being wild. I'll talk about that more in a minute. So this was FSLY, entry 1128, stop 1109. And notice it's an $11 stock that has like a 20-cent stop. And that means that the total capital required to own the stock for that period of time, the total investment is $28,000, but you only need to have a $7,000 account because it's 4-to-1 leverage. So $7,000 is what you'd have to have in your account to take this one trade. $7,400 is what you have to take this one trade. Stop distance, you can do the math. Now this is at a $500 risk. Now there's no way you should be using a $500 risk if you have a $10,000 account. But just to make the point of what you can do, it's a $500 risk. Position size, that's just calculating, exactly if you had a $500 risk to the share. Naturally, when you're really trading, you probably round that off to 100 shares, one way or the other, it doesn't really matter. You don't have to, you can trade odd lot shares, it's usually best to just round it off. I'm not really sure these days if there is any, it used to be you kind of got second rate treatment with odd lot shares. I'm not sure it's even true today anymore. I haven't played with it, so I'm not really even sure. But not a big deal either way. And then, so you make $657 in an afternoon, in a day. And this is one of the trades from the room. You can see the numbers here, 12. It was a lunchtime trade, which I've been doing occasionally lately. FSLY, entry over at 1127, stop under 1110, exit at 1150, 100% all one target, entered at 3:30 in the exit 3:30 in the afternoon. But a $500 risk is 1.3 R units or $657, right? That's just math. If you have any questions, please let me know. Throw it out if you have any questions. That's what I'm here for, right? I would assume like the email I sent out, a couple of them, and I did some a month ago, that it would just be all crystal clear. It's just numbers, it's math, no big deal. But I guess for people not in the doing this, I guess I can see where it gets confusing because I got an awful lot of questions about this. So please feel free to ask if you have any. Nobody knows you in here, nothing to be embarrassed about. This is the chart. I mean, this is all we do as a day trader. If this was a weekly chart, well, it wouldn't have gapped down. If this is a weekly chart, you could have taken this over 5, 6, 7, 8, 10 weeks or whatever it was, a daily chart, hold it over 5 days. But this is a 5-minute chart, and all this is buying in here. I'm not about the strategy tonight. This is just about the money and the risk. Entry in here, sell it up in here, and there you go. You're holding one afternoon. And that again that could have been done with a $7,500 account. You can't do that today as a day trader, but I'm explaining why I'm doing this a little bit early because I want to, if possible, handle this properly when I think there'll be kind of a surge for people wanting to day trade. In a good way, I hope, not a bad way. Discuss size of the account, reasonable risk for what you're doing, reasonable expectations. Again, this example was about what you can do. I don't think it's very, realistic that you'd want to risk that much money with that size account. You wouldn't. And again, I preach and preach and preach in free events and to my seminar students. Even if you're going to jump in and follow me in the trading room, you have to start really just paper trading initially, just to get the flow of things. Oh wow, I didn't understand that. I screwed that up, whatever it is. And then you start off with just a very small risk amount, $5 or $10, for a couple days, for a week, and just build on that risk amount. But eventually you're going to end up risking an amount of money appropriate for the account you have. Now, when I say the account you have, maybe you're putting 10,000 in a day trading account, when this rule is abolished, and you have a lot of other money to replace it, and you maybe can go with the bigger risk amount because that's what you want to do eventually. But if this is kind of your fund capital to play with, you got to keep the risk amount at a reasonable level, $100, $200, whatever it is. But even still, if you're at a $200 risk, you would have made what, $300 on that trade in an afternoon, and that's what your expectation should be. Now, yes, if that is the size of your account, you can only do one trade like this at a time. You couldn't do 2 or 3 unless they were trades that required a smaller capital amount. Fine, great, you understand that there are a lot of stocks that have nice movement, and these are not crazy stocks. I'm going to talk about that on another slide. This is a very controlled, look at this chart. I mean, it's just a very, very controlled, nice stock. This is not a crazy. Yes, you can make money with crazies. I don't like crazies. I hate crazies, meaning the wild, volatile stocks. These are just nice, clean stocks. And in today's environment, things just have a better range of movement. You get more bang for your buck in terms of your investment capital, if you will, your day trading capital, if you will. So, okay, Paul, I get it. But so I have to trade all $11 stocks. Is that it? No, it's not at all the price of the stock. It's the volatility in relation to the price of the stock. If you take a look here, and I'll come back to this again, but ACN here, $250 stock. Guess what? You only needed $8,000 to trade it. Here's the numbers. We'll come back to that sheet in a sec. Here's the numbers. How can you do a $250 stock with an $8,000 account? Well, simple. Because the stock is kind of volatile enough that there was a $4 stop required, $4.02 per share, right? So the risk amount of $500, position size 124, you're only buying 124 shares. Can you make money with that? Well, yeah, you would have made $600, over $600 with a $8,000 account. So it's not per se the price of the stock, depends. There are some $10 stocks you probably couldn't trade, because they're so boring and so slow. So it's the really boring ones that don't move and require a lot of share size to make your money. Those are the ones that are going to be more difficult for you to do. Are there any questions so far? I know, talking really fast, but I don't want to keep you all here if you're bored with some of this. But if you're here, you're probably not bored. And again, this is a nice moving stock, but look at it. I mean, it's just, and actually I did this 2 days in a row. I didn't put the other trade, I didn't do a blackboard slide like this for the other trade. This had a $4 stop. But it's just a nice, this is the day it gapped up. And then here's the next day. I mean, look at this, just a nice, clean, this trade made even more money and required, as this day here. This required a little more capital. This required $12,000 this day. So that was a little more capital. But guess what? Here's my big point. That's at a $500 risk. You wouldn't be doing that. If you bring this down to a $250 risk, let's say, well, you'd only need $6,000 to do the trade this day. And like if you're in the room following me, Right now, take a look at the capital requirements here. $8,000, $8,000, $9,000, $5,000. You know, 2/3, or I put it in the email, 2/3 or 3/4 of stocks, you could do at a $500 risk, which you shouldn't be doing. Virtually all of them you could do if you drop your risk down to $200, which again is what I presume you'd be doing with a smaller account like that. There's only a couple stocks in here that really be off limits to you, and these are like PG. PG is something you would never trade because it's too boring of a stock for $140. It's not like ACN where you have a $4 stop. It's a smaller stop, so you end up needing too much capital to trade that. But if you're in the room and you're following along, all you do is you get a little sheet like this. This is like I just took a snippet out of what I put for the room, and you just say, okay, Paul's trading a $60 stock with a 59.60 stop. You would say, oh, I need $18,000. And you'd say, okay, I'm going to pass that one. That's not what I want to do. And also, it's possible that if you're following me in the room, I may take a second trade you may not be able to do. And it is kind of luck of the draw. So nice clean charts, no issues, no volatile stocks, no crazy stuff. It's just that in today's environment, we have, I wasn't sure what the right word to use is. I don't want to say it's the volatility is there because it implies, something kind of negative, but there's just a larger range of movement on the average stock. That's all. Very clean, nice movement. And it means, a $20 stock can easily move 20, 30 cents, instead of moving 5 cents or whatever. Today's three-prong advantage, movement without crazy. Here we go. There are many stocks right now that are not wild or speculative, but they have enough clean intraday range to produce a structured $500 trade for roughly $7,000 in capital. Again, I don't recommend that you're risking $500. I'm just showing you what is possible with the math. That's all, right? If you come in with a $7,000 or $10,000 account, you got to protect that. You got to start off on paper. You got to work your way up to $10, $20, $50, $100, and maybe you end up at a couple $100 risk. But that is really nice money for just sitting there a couple mornings or whatever time you're going to sit there for that size of an account. There aren't, and again, beyond that, it perhaps lead you down a road of saying, hey, wow, I'm doing good at this. Let's put some more money in here. Let's increase the risk a little bit as we go. These aren't momentum chases or junk names. They're liquid institutional stocks that are simply moving enough during the day to allow for precise entries, defined stops, and realistic targets. What matters is not volatility for volatility's sake. It's controlled range, enough movement to get paid, but clean enough to trade professionally. Right now, there are plenty of liquid, high-quality names with clean intraday range, enough movement to pay you without chaos. That's where precision trading lives. I hate and do not trade the crazies, and I teach my seminar people, don't trade the crazies, right? Well, you don't have to ask the seminar person. Everything I send out to free events, I've mentioned this frequently, I think there's huge disadvantages to trying to trade the crazies. I'm talking about, the $3 stock that just released news and it's gaps up to 5 and pulls back to 4 and runs up to 7. Sure, there's great opportunity, but try and catch it. It's hard. I kind of did this right. I was just going to point out here that, the majority of these trades were doable, even at a $500 risk and at a $200 risk. Virtually I think every trade on here but one or two was doable. Oh, every trade but one was. And if you want to trade the market and you're in a day trading account, and occasionally I do the market, I post as the TQQQ, but you can simply do, and I can, instruct you on this if you're in the room, but they have same day options or next day options where they're very, very liquid these days. I mean, you can actually trade options in lieu of the QQQ itself or the TQQQ. Or futures, if you don't have a futures account. You naturally can open a futures account, but then you can only trade the futures in the market. So I really highly, highly recommend that if you're going to open a $10,000 account, you do it when the PDT rule is abolished, open a stock account, and then if you want to trade the market, you do it through options, calls and puts. You do it through the calls and puts on the QQQ or the SPY. And you can get, the ones I normally look at, the next day, $5 out of strike, they're $2 to $3. You get 10 contracts of that. You're risking and using capital of $2,000 or $3,000. That's all it is, and you can make good money with that. But I only do that on the days that I feel the market is the best trade, and that's usually not the case for me. Yeah, we did this. I just want to blow up and show you the risk amounts that you needed on those days. Today's three-prong advantage number two. This is number one. The fact that there is nice, clean movement without being crazy. That wasn't always the case. A lot of times things are just boring. You wouldn't have $30 stocks that move 50 cents all the time, and now that's the rule. The other advantage is commissions. That most of you are spoiled by that. They don't even realize what they were, but commissions are nothing or almost nothing. You could have nothing for commissions, and maybe you get hit with some little slippage here and there. You can have a small price for commissions, but whatever they are, commissions are kind of a non-factor in your trading these days. And coming soon, hopefully, the third advantage is the ability to trade with a smaller account. And that's the thing that we're kind of waiting on in terms of the PDT rule being abolished soon. Any questions? I just have one more topic I want to talk about, which is a sensitive topic. NASDAQ moving forward, 23 hours, 5 days. Yeah, I've heard about that. I don't like that. I don't think it's going to necessarily affect what we do. The biggest thing it's going to affect, Neil, is it's going to take away gaps, which is something I like because there won't be gaps technically. I got to see really how it plays out in terms of, because even right now while the futures trade 24 hours a day, the volume during non-market hours is really, I mean, you see the huge volume spike, when the market opens. There's a huge difference. I don't really know if it's going to be the same thing like that or not. We'll still be day trading. I mean, it's just, nothing's going to change that. It's just a question of, what changes. I could see it possibly being an advantage in that I imagine the mornings would be more subdued because there wouldn't be, and that could be a plus or a minus because you lose the gaps, you lose the shock value because they've been trading somewhat, but also maybe you lose a little bit of the craziness and it's maybe a smooth out pattern. So really got to see what it looks like when that happens. It looks like that's going to happen too. That is not as clear cut though yet. I think that's a proposal. It's not passed yet. Yeah, yeah, but wild can work. I mean, yeah, not as wild, true. But like I said, you will miss the gaps. That'll be a thing. And I don't know, maybe at the usual. Yeah, we just have to see what it's like. Don't know. But I'm not worried about it being any big deal. That also is not as close. That has not been a, yeah, Bitcoin's 24/7, sure. Um, that has not been a past thing yet. The PDT rule, my understanding is that the FINRA has passed it, and the SEC has to rubber stamp it, or maybe I got those two entities mixed up. But it's basically passed the entity it has to pass, and it just needs a rubber stamp, which is already kind of in the works as being a done deal. The 24/7 thing, I think it's still being haggled about. I don't know, but it's coming sometime. We knew that years ago that eventually there'd be 24/7 trading of everything, anything, anywhere, anytime, any platform. So here's one last little topic I just want to make you aware of, and I don't want you to take this the wrong way, but in terms of the trading room, if you've ever been in trading with 100 plus people, the people running the room are not trading unless it's a futures room. Why are they not trading? If you're in a stock trading room with 100, 150 people, and maybe they make the price really, why are they not trading? I can guarantee you they're not trading. Yeah, I mean, they're going to affect the trades to some degree, even moderately liquid stocks. And that's what I'm monitoring all the time. I never ever want that to happen. I'm never going to have that happen. My first thing is I want to make money, and then second of all, I want everyone else so too. Whenever I ever see that happening, there's a lot of variables involved. It says discuss the variables. In other words, if there's 50 people in the room, here's the thing. On any given day, only statistically about 70% of the people are there because some people are part-time, some people on certain days, some people certain weeks, whatever it is. So only 70% of the room is in attendance typically. Those people in attendance, there could be people that know what they're doing and they just kind of listen to me for guidance and they kind of do their own thing. You know what I mean? They may or may not even take my trade per se, or maybe they like my trade, but they get in at a different level. They take a different target, whatever it is. People can do whatever they want. They don't. And then there's some people who follow exactly. The people that are following exactly, then the next question is, well, are these big traders that are risking $1,500, or are these traders that are risking $50? So you have to kind of monitor. You know what I mean, Neil? There's no absolute thing as to what a limit is, and that's why. So right now, where the room is around 40 some people, whatever it is, which mid 20s show up every day. if, there's no problem at all right now. And also I trade liquid stocks for the most part, but some of the ones get borderline. If we get a gap that's really nice, and we had one last week, I don't want to be in a position where we're chasing our own entries and we're all selling in front of each other. You know what I mean? Does that make sense? And I want the people in the room making money. I'm not sure what you mean by that exactly. I mean, I want people in the room making money. Yeah. Well, yeah, I've been involved with what I scan. I'm generally, Greg, the stuff on my screen, like I have my day trading list of 300 stocks, and they're basically all over 2.5 million shares a day. But that's not a guarantee of tradability. It depends. There's some 2 million share stocks that trade really nice. There's some 4 million stocks that. So you got to look at the overall volume that you're bringing on the board. And then you also look kind of at the spread, the liquidity, the depth, and just how it trades. Throughout the day, you watch it a little bit and see. And you get a sense for it pretty quick. So generally speaking, I'm always looking at something that's in the 3 million plus range. And there are some stocks, like I said, like there's 15 or 20 stocks. You could buy 20,000 shares and nobody even know you bought any. They wouldn't even reflect it. So I want to keep enough of a range, if you will, of stocks where we're not required to trade just the top 50 stocks and nothing else. So I want to do that because that's how I trade. So at some point I could have to say, hey, this is I noticed the room on this trade and I shouldn't have. The only way I have to limit it really is to just kind of slowly put brakes a little bit, and that's just by simply what I've set up is just a tentative schedule. The price is what it is today. And if we go over 50 people, it's going to go up a little bit. Over 55, it goes up a little bit. And at 60, I'm going to put a temporary freeze for a couple weeks until we evaluate how the room runs. Because like I said, you could have 60 people and it runs great. You could have 50 people and maybe a problem. It just depends on who's following me exactly and what their share size is. And there'll be an occasional thing where maybe, whoops, I think we moved that, but on a less liquid stock, like we had some gap around the screen today that I didn't want to do because even just on my own, I was afraid it was a little too thin. And we may get an occasional one of those. I don't care if occasionally it's a problem. If we get a gap or once in a while, I say, hey, this thing's a little thin. I'm going to give it a try here, and it pops 10 cents. We're all getting into it, whatever. I mean, that may happen occasionally, but I don't want it to be a regular thing. Does that make sense, everybody? Last couple of just closing comments here. Who can day trade? Well, there's two group of people. You can follow or you can learn. You can follow along by just joining me in the trading room or join your own trading room, whatever you want to do. Or you can also learn by learning how to do it in a seminar program. Now, I don't hold any bunches back. I don't teach people to trade in the trading room. That's not what we're there for. I answer questions, don't hold anything back. But there comes a point where it's, well, you got to learn how to read a chart, and my two-sentence answer is not going to teach you that. So you do have to learn if you want to learn, and it's a separate process. However, you will pick up a lot of stuff in the room, and for people who are in the seminar program, I think they learn a tremendous amount by seeing the concepts that are learned in front of them every day, right? Is it reasonable to expect and constantly make 2K a week in a reasonable amount of time? Is it reasonable to expect? It depends on what your account size is, Vagrant, of course, right? I mean, to make 2K a week, 500 a day, let's say, what my guideline is that the goal is to make one risk unit a day, 20 a month. And I consider anything over 18 to be phenomenal. Because that means if you're risking 500 bucks, that's 9K for the month. If you're risking 1,000 bucks, that's 18K. And I consider anything 15 to 18 to be very good, 12 to 15 to be okay, or to be good. And under 12, you're still making money, but hey, you'd like to get it up over 12 risk units per month, at a minimum. So yeah, you'd have to be at a $500 risk. You'd have to be making about 1 hour a day. Yeah. So that should be a very reasonable expectation once you know what you're doing and once you have discipline and everything else. If for me in the room, a lot of people won't like me in the room because I'm very boring. Take 2 to 3 trades a day. I'm not the hyper scalper, and there's a scalping concept where you're trading a handful of stocks like Ford, and you're trading 10 to 15,000 shares at a time, and you're going for 5 to 6 cents. That's a good scalping technique. I like that. It's something I'd consider. People who are just constantly in and out of trades and taking 500 shares and getting a 20-cent move, they're never making money. I've never seen anybody make money do that. It's not scalping. It's called just chicken targets. And what happens is, and I have a video about this somewhere. I forgot what it's called, but it was a presentation I did, and it just talks about the fact that there's a certain trading style of scalping where the person feels good because they make money and they say, oh man, I made money every day this week. And then on week two, they give it all back times two on one trade. And then they say, oh, I just screwed up that trade. But no, that style that they do, part and parcel of the ability to make a little money every day is the fact that you're going to have a big losing day. You can't avoid that. So, there's a lot of stuff out there, and you have anything that you think works or you think I'm telling you the wrong thing, let me know. Your options room is not going to happen. See, the thing with options, there's nothing special about options. You have to understand where the underlying stock is going. So there's no option signal. That doesn't exist. I trade options my first couple of years exclusively, and I was into all that stuff. There's no option signal that exists in a vacuum. What matters is the underlying stock, where the underlying stock is going. That's all that matters. And if you don't know that, then it doesn't matter if you're trading the stock or you're trading options. You could be selling puts or doing a bullish put spread or selling a bullish call spread. It doesn't matter what you're doing. If you don't know where the stock is going, you're not going to make money in options. So there's no separate special thing. And I encourage you, if you don't believe me, just go try out whatever service it is, whether it's a letter, email, whatever it is, and try it out for a month and let me know how it goes. So who can do this? Anybody that wants to. Just a question if you want to. And if you do follow, you have to really set the rules up for yourself about what you're doing. Because I've had people that say they're following, and I'm using air quotes there, but they're kind of taking trade ideas and doing it on their own. And I've had people with me after a winning day, they lose because they take a little tiny profits on my bigger winners, and then they take full losses plus on the losers. So you have to be careful exactly and plan out for yourself exactly how you're going to handle this. Do you want to take ideas and manage them yourself? You want to follow everything I do? But be careful, lead or follow. And simply, for those of you who haven't tried day trading, there's nothing scary about it. And if you think there is, just start off with a very small risk amount, play around, play along, so you're not nervous about anything, so you're not worried about, so you don't go over managing stuff, because that's what people tend to do a lot. All right? That's all I have to say, but I'll stay here for 2 hours if you have questions. Remember, tomorrow we're meeting for a fantastic presentation. Any questions, anybody? The math, economic numbers, which ones matter for day traders? Are you kidding me, Vera? Oh, you mean which can move the market? Is that what you mean? Okay, you don't, you're not implying you'd ever go read an economic number, right? Yeah, okay. Well, first of all, let me say this. It kind of doesn't matter, right? Because most of the big ones come out at 8:30, right? So you see the movement before the market opens, right? And then number two, the ones that come out at 10 or 10:30, you just kind of be aware, because there can be a number that's not considered big, but it moves things. There can be a big number that has no effects at all. But if you want to know VRL, if you go to, I forgot the site, but if you Google economic numbers and ranking, and there's some sites that actually kind of color code or tell you in words how important they are. Okay, so head to them. Look at trades you took today. I don't have anything up. I had a losing day today, Frederick. I had a winning day yesterday. I should have had a winning day today. I got hooked on a stock called, what did I trade today? I was so ticked at. I kind of screwed up one. I had two winning trades. I had a really nice winning trade. I had a partial loser, and I took a bath on one stock I did this morning. I did it twice. I had a losing day today. The beautiful trade was on Riley, R-I-L-Y. Another winning trade on CGNX, but I took a partial loss on it because I got out like an idiot. And then UAL, I played twice. And the second trade was a mistake to me. Forex Factory, I don't know what that means, Morris. For long-term traders with earnings reporting soon, do you not enter them? RA, do you manage them? There's very little to day trading here, but I'll take the question. If generally, any long-term position, I'm not going to enter if earnings are within the week. And my general rule is I want to be up a moderate amount going into earnings for a little padding, for a little comfort zone. So if I take something that's fairly close to earnings, I want it to be up, because sometimes you get a run into earnings, so you say yay, but otherwise I would exit. And generally, if I'm going into earnings, I have no equity and I want to exit, because you want to participate in overnight gains, you want to participate in earnings gains, but to me, you don't want to do that at the expense of having a big losing trade. Oh, Forex, oh, thanks, Morris, okay. Good answer, I just didn't know what the question was. Forex Factory, okay, so there you go, Viral. Forex Factory, and I know there's other names out there too. If you Google, look around, so they'll tell you which are the more important ones according to them. How do you window things down since there are thousands of stocks? Well, here's what I do, Vagrant. I'll gladly discuss it. For day trading every day, you mean day trading, right? Yeah, for day trading every day, I do go through a bunch of daily charts. Now, a lot of daily charts do not turn out to be the appropriate setup for day trading. But nevertheless, I want them on the screen because if there's a nice movement on a daily chart, there's a good chance that one of the days it'll give an entry on an intraday basis. So I scan about 1,000 charts. It takes me 20 minutes to scan 1,000 charts, so it's not that long of a time for me. And I probably up with 10 or 15 daily charts that I like, bullish, bearish, half, whatever it is. And then I have a list of 300 stocks. It's called my PL 300 list. And it's usually only about 250. I just call it the PL 300 list. PL is my initials. And those are just the 300 highest volume stocks in the market, with the exception of the fact that I take out some things I don't like, some duplicates. Like right now, if you do the top 300, there's too many Bitcoin derivatives in there, so I take out a lot of those. I don't want to see 40 different kinds of Bitcoin stocks. I don't want to see 30 different types of oil stocks. So I just whittle out, I just kind of whittle out some of the duplicates. And then what I simply do is, so usually if I go through that list at night, I go through the day trade, I go through the daily charts. I usually get up with 10 or 15 stocks. I go through my 300 list, I get another 10 stocks. And then I look at the gap list in the morning. Gaps can provide great opportunities. And I usually get 10 or 15 stocks there. So I'll come to the room with maybe 30 to 35 total stocks. And then I go through and then compare that to my market bias for the day where they're opening. And I usually have maybe 10 or 15 or 20 charts up that I just monitor. And then usually 4 or 5 things that are what I call the hot list, the things that I may be entering the first 1, 5, or 30 minutes of the day. Good answer? Can we some use an AI model to do some of the prep work? I actually played with it. As of right now, my answer is no. I'm not any expert with AI at all. Matter of fact, I'm not even good enough to be a novice. But AI does not have access to real market data, and if you somehow got it, maybe it could. At the moment, I don't really know. But here's the problem, VRL too, is that, I mean, right now you can set up scans to shortcut this. But I don't use scans because they just don't really do the job for me. When I look at charts, there's so many times I see something, it's like, yeah, I love that. But yet, if that were a scan, I never would have picked it up. I don't even know what scan you would write to find it, right? Do put call strikes help us? No, not unless you were a market maker in the option and you saw the flow continuously and you were, an absolute expert at it. But no, otherwise, your option stuff is not going to help you at all. When you hear stuff like this, Vero, you'll hear people tell you why it does matter, right? But then there's this whole list of reasons why it doesn't matter. I mean, a lot of option stuff. Remember, a lot of options. Things are very complicated these days. Like when you buy the QQQ, anybody is still listening to me. If you buy the QQQ, you go buy 100 shares of the QQQ. Well, you buying the QQQ, will that affect the price of Microsoft? Yeah. No, it absolutely will. It absolutely will. Absolutely, positively will. Yeah. Hang on, you guys are getting way ahead of me. Vera, this is your next question. There's nothing wrong with having some favorite stocks. I don't really do that though, unless something really strikes my fancy. When you buy 100 shares of the QQQ, it gets very complicated. But the QQQ is a manufactured stock. It's not a real stock, and it's manufactured by a broker. And the broker just says, "Here, I'll sell you this QQQ thing." And eventually people are trading back and forth, but for them to be created, what's happening is you're buying 100 shares of the QQQ, the broker's selling it to you. They're not taking a short position, VRL, right? What they're doing is that they're simultaneously by computer instantaneously buying the equivalent of every stock in the QQQ to offset it, the proportionate amount. So when you buy the QQQ, broker's selling it to you, the broker turns around simultaneously is buying all the stocks to make up the QQQ, just make an artificial thing. Does that make sense? And this is where it gets confusing because then tied into that, they may also hedge that with options. And a lot of, anytime a broker sells an option that is not being sold to you from another customer, they have to offset that with the stock. So if they sell you a call option, they don't want the short side of it, so they're going to go, if you buy a call option as bullish, they're selling you the call option as bearish, they're going to go buy the stock to make up for that. So it gets very, very complicated. And people that say, oh, you look at this option thing, well, there's a lot of stuff going on that's just not relevant to people buying and selling stock because they want to. All right. Most of the trading reviews events, most of the trading room review all events and indices. Some send out preview. Well, I have a daily market letter that goes out, JJ, and I also do. I get on the mic at 9 and discuss all that stuff. But you know what? All the economic numbers and events, it's completely a waste of time to read or to listen to any of that crap. It's completely worthless. 100% worthless. So all I do is I say, hey, there's numbers coming out at 10. Just be aware of that because maybe it may move the market today. If you're in a trade, you're doing well, maybe you're protected, whatever it is. I'm not going to sit there and discuss what the GDP was and all the crap that makes absolutely no difference to our trading whatsoever, long term or short term. It's a ridiculous concept to do. You want to save some time every day? Don't read economic crap. Don't read earnings reports. If you want to do that in your personal life because you're curious about companies or the economy, do it. But for trading, it's only going to screw you up. Paul, do sectors hint when the market tops or bottoms out? Absolutely. I've said that before many times. Sector rotation can be a big influencer when it comes to picking possible tops and bottoms of the market. I've used it a couple times. It doesn't always happen overall, but sometimes it does. Because, in a uptrending market, not all sectors are doing the same pattern. You have one sector's doing this, and while that sector is doing that, another sector may be doing the exact reverse, right? Everything's moving up like that. So when money comes out of here, right, it's coming out of here to go into this sector, right? Well, when you see the high sector selling and the low sector is getting a bounce and then breaking their trend, that's an indication that can tell you a little bit ahead of time that, hey, the money's not coming out of strong stocks and going into the weaker ones. It's just coming out of the market, period. The weaker ones don't want it. So that absolutely is something you can look at, yes. It's a very advanced look at it. Most people don't get it, but yeah. Boy, a lot of questions here. What? Did I get all yours, Vagrant? You had a lot of comments there. Did I get all you? Oh, okay. You're right. When the focus on a few select stocks, I said that was VRL. That was the one time I did it. That was Vagrant. Yeah, Vagrant. I don't have a problem with doing that. I've done it occasionally in the past. I don't really do it though. I don't like hold a couple of stocks out every day and say, hey, let's look at this. I remember a long time ago, I had a huge favorite in Qualcomm. I traded Qualcomm all the time because I had a bazillion. What stocks are on your do not trade list? The ones that just for no reason have bitten me and I have a psychological problem with them, or if they just truly seem to have bizarre patterns sometimes. And that is VRL. Show did. Do you take questions about gaps? Generically? What do you mean, here? I'm answering questions. Go ahead. Oh, I don't want to get into a seminar program review because you're a seminar program, but just, yeah. Well, I mean, you asked and answered your own question. As you know, because you're a seminar person, there are gaps that can be looked at as either way gaps, and you look for confirmation in the direction you want. Matter of fact, there's a whole section in the manual that you have and in the home study that you have and in the live class that you're going to hear this Saturday that there's something called gapping to target. It's a specific concept and it's taught exactly how to trade that. Remember? Gapping to target. A very, very specific thing how to do it. No, I don't have any faves myself, and if I had any faves, they would not be things like Tesla, Microsoft, and all that other crap. Tesla, maybe. I do Tesla sometimes. But all the rest of the big name market stocks, I mean, there's no edge. You're losing an edge to me, Vagrant, in that when you have a stock that's kind of sticking out on its own, it's unique and it gives you an edge a little bit. I don't, if I want to just trade the big seven, I would just trade the QQQ. So I normally aren't doing those. I'm doing the more unique things that have, I scan that 300 list, and there's usually 2, 3, 4 things that stick out to me like, wow, there's something for tomorrow. Just unique pattern. It's all about patterns. Vagrant. Yeah, it's all about patterns. You got to get off this thing about economic numbers and fundamentals and got to trade Tesla and Tesla announced this and all that. Just look at patterns. I don't care what the symbol is at all. You look for patterns that tell you, hey, you know what? This stock can't hide it. It's being bought. Or I can't hide it. People are selling this stock. And you find those patterns and you find great entries. And that's what it's all about. All the rest of that is just dribble nonsense for losing trading rooms. That's all it is. What basic rules do you have with trading smaller time frames, larger times? Well, I have to ask you to clarify that question a little bit, Frederick, because I don't know what you mean. I mean, number one answer is all time frames are the same. There is no difference. It doesn't matter. There's a chart is a chart. Here, go back to the slide here. Here's a chart. I don't like that chart. Here's a chart. It doesn't matter if that's a 1-minute chart, a 5-minute chart, a 60-minute chart, a daily chart. It doesn't matter what it is. It's all the same concepts that you use. So yes, I have tons of rules. I would be here for about 27 hours telling you all the rules, but nothing varies between time frames really, other than the obvious stuff. I mean, on a daily chart, there's day breaks, there's gaps, and there's rules about holding overnight. But other than that, it's all the same stuff. Matter of fact, sometimes in a seminar program, Frederick, I'll take a chart and just talk about it, and you don't even have to know what chart it is. As a matter of fact, I even use an example where I have a yearly chart, and I propose it as a 1-minute chart, and you wouldn't know the difference. Nothing would change in what you do. Everything is per time frame. Number one, moving averages are not support. Moving averages are just a guide to it. See, Frederick, you would love hearing all this. It sounds like you're trying to learn this stuff, but the definition of trading to me is understanding the interaction between the bulls and bears across the 4 pertinent time frames. So yes, a 2-minute support level is not a 60-minute support level, but you're trading one or the other, or using one for entry or whatever. So naturally, they're all different. But you could, for example, you could trade a 2-minute chart theoretically from some area up to a 60-minute resistance level, right? And then at that area, maybe you're going to short it. That's not typically what I would do. But every chart has its own concepts, and it's all unique to that chart. So it depends what time frame you're trading. Whatever time frame you're trading, there's always a total of 4 time frames you have to look to make sure that trade is validated, 2 above you, 1 beneath you. And that, to me, is one of the biggest concepts about trading that people don't get. Questions? Doesn't matter at all. Doesn't matter. It all reflects on a chart. So the same exact news event, tariff, whatever you're talking about, it doesn't even really matter what it is. The only news that truly changes the market is shock value news. And that's extremely rare, and none of it was tariffs in any way, shape, or form. Matter of fact, if you listen to the news, right, everybody said tariffs would kill the market, right, and the car dealers would get killed. Every pundit on TV was 100% wrong, even though they won't admit it. Market went flying higher. But here's, you get a little, like a news event, like they don't like tariffs. Here's the thing. If this is your market pattern, Vagrant, you're like here. Well, you get up here, and you know what? You could say anything, and the market's going to react and drop because people take profits. So, tariff news came up. Oh, tariffs killed the market. Well, no. If we were down like this, and bad news came out, here's what would have happened. Well, dude, that's all there is, and we're higher. So it's just how news is often used as an excuse to move a market that's going to move a certain way anyhow. There's little knee-jerk reactions, yes, but if that knee-jerk reaction is not triggering a bigger concept, it doesn't matter. The best way you could ever trade is to not even know what the news is, to not even care what the news is. What good does it know to know that? We're in the room the other day, there's somebody who was a little bit newer, and there was a very bullish gap. I forgot what stock it was, and I go to play it long, and they mentioned what the news was. Oh, did you know the news was this? It's not very good news. I don't care. I could care less. If it's not good news, why is the stock getting, bought like crazy? I mean, or why is it holding? Again, we look at certain technical things to say, hey, who's winning? The buyers or the sellers across the different time frames, and there's nothing better than news that you tell me is bearish and the stock starts going up. That's the best thing in the world, because it means, the news just doesn't matter to the degree most people think it does. You should never read a news report. You should never listen to pundits on TV. You simply look at a chart, because that is what is actually truly happening. And when you learn to read a chart and you truly understand what trends are, what support and resistance really are, what the 4 time frames involved are, that's what you need to learn. It really is. Trust me, it really is. The sooner you learn that, the better. Everybody learns it eventually. Let me tell you something, whatever shortcut you're looking for, and somebody asked me about this the other day with open volume, and somebody asked me about short interest. And a long time ago, let me give you another example. A long time ago, this thing came out where you could buy access to the specialist book, the one that you don't see, for $10 a month. Do you think that helped you? Anything that you can get for free or for $10 a month, anything you can buy anywhere is not going to help you. If the whole public has it, it doesn't help you. All this kind of stuff like this is just completely worthless. What you guys are talking about, just go bet on a football team then. It's got nothing to do with It has nothing to do with trading charts. It has nothing to do with making money from trading stocks on charts. What else we got? By the way, if you notice, for most of the questions you've asked, I'm not exactly wishy-washy in my answers. And there's no other reason for me to be non-wishy-washy other than just simply the truth. I've been sitting in front of a screen watching every tick of every stock for 25 years, and I don't care what anybody has to say. This is the truth. I respect anybody that's making money. That's great. But I don't respect people who are constantly offering ideas of how to make money when they're not making money, which is what you normally hear most of the time. I see another question coming, and then we're probably going to. You guys are asking a lot of questions. Make sure you're here tomorrow night. I think a lot of stuff that you're discussing here will kind of come up again tomorrow night, or will be discussed tomorrow night in my presentation. Oh, Frederick. Well, thanks for saying that. I didn't. Do I know you? Were you in the room? I mean, would I know you? Back then I wasn't, part of the company. I wasn't like an owner, so I didn't know people's real names, or all I would know is your email address or your name and your handle in the room. But thanks for saying that. You go way back. Or email me. Just email and say hi. Let me know who you were, if we interacted, or if you ever, did anything. Okay. All right. Well, let me know. All right. All right, everybody. Is trading fun, stressful? Hey, Morris. Trading. One of my sayings I've said for years, and I don't say much, is trading is fun. Trading is fun. It's got to be fun. And initially, it may be stressful. You got to get beyond the part where it's stressful. You got to get beyond the part where it's stressful. That's what I think. I know you too, Morris. Send me an email. Say hello if we haven't talked in a while. Again, I apologize that, unless I see your handle, your email, I usually don't know some of you guys. I just saw your email. I remember your email. I do remember your email. Okay. All right, everyone. I'll see you tomorrow night, all right? See you tomorrow night at 5. We'll have some more fun tomorrow. Didn't expect this one to be that long.